Hello, I'm Ron Wilson and welcome back to PD Sessions. The federal government has released its 2015 budget with significant changes to pension assets test thresholds and tax breaks for small businesses who'll now receive an immediate tax deduction for any individual assets they buy costing less than $20,000. In international news, US GDP growth has stalled markedly in the first quarter of 2015, and the eurozone is similarly struggling with business activity growth pulling back. In other news, the portfolio holdings disclosure reporting and choice product dashboard requirement aspects of the stronger super regime have been delayed. Trevor Trahan has the details.
As part of its May 2015 federal budget, the government is increasing the lower assets test thresholds and taper rate for pensions, and is providing tax breaks to small businesses to reinvigorate the economy. According to the government, pension changes include increases to the assets-free thresholds and asset taper rate for pensions from 1 January 2017. This means pensioners with modest assets will receive more pension. Pensioners with more substantial assets will need to rely more on their own means. A continuation of current indexing arrangements, with the government not proceeding with indexation of pensions by CPI only. Pensions will continue to be indexed twice a year to the higher of the increase in two measures of inflation or in male average weekly earnings. The major small business changes in the budget were a reduced tax rate for the more than 90% of incorporated businesses with annual turnover less than $2 million. The company tax rate for these businesses will be reduced by 1.5 percentage points to 28.5% for the 2015-16 financial year. And small businesses will receive an immediate tax deduction for any individual assets they buy costing less than $20,000. Currently, the threshold sits at $1,000. The government will also provide a 5% tax discount to unincorporated businesses with annual turnover less than $2 million from 1 July 2015. This discount is to be capped at $1,000 per individual for each income year and delivered as a tax offset. The RBA has decided to cut the cash rate for the second time in 2015, with the rate lowered by 25 basis points to 2%. The RBA's Governor, Glenn Stevens, commented that the RBA board judged that the inflation outlook provided the opportunity for monetary policy to be eased further, so as to reinforce recent encouraging trends in household demand. RBA rate cuts have obviously benefited borrowers, but less attention has been given to the impact on savers, according to Rate City's Rates of the Nation report. According to Rate City, key trend data during the third quarter of 2014-15 was in the personal finance categories of home loans. Fixed rates remain the biggest movers again this quarter, with banks continuing to push rates to 60-year lows. Fixed home loans, on average, are sitting below variable rates. Credit cards. Interest rates on purchases and annual fees increased slightly during the quarter, which can be partly attributed to a number of premium cards becoming available in the market. Deposit accounts. Deposit rates tracked down on average over the period, with online savers and term deposit rates falling by more than was passed down by the RBA during this period. Foreign direct investment, or FDI, in Asia still matters to the region's export capacity, and some countries are better positioned to benefit from the improving momentum in FDI from the US and China, according to investment management and research firm AllianceBernstein. FDI in Asia has expanded over the past 3 years, AllianceBernstein found, despite a downturn in the region's investment cycle and lackluster export growth. Although FDI has historically been closely related to investment ratios, AllianceBernstein claimed they seem to have been decoupling since the 2008 global financial crisis. US real GDP increased at an annual rate of 0.2% in the first quarter of 2015, according to the advance estimate released by the Bureau of Economic Analysis. However, this compares with real GDP increasing 2.2% in the previous quarter. The Bureau stated that the deceleration in real GDP growth in the first quarter reflected a slowing in personal consumption expenditures, downturns in exports, non-residential fixed investment, and state and local government spending, and a slowing in residential fixed investment. Eurozone business activity growth pulled back from March's 11-month high, according to Flash PMI survey data for April. The market Eurozone PMI fell from 54 in March to 53.5 in April, according to the Flash estimate, based on an expected 85% of usual monthly replies. Although this signalled an easing in the pace of expansion, the latest reading was still the second highest seen over the past 9 months. The slowdown reflected weaker rates of expansion in France and Germany, which offset an acceleration of growth in the rest of the region to the fastest since August 2007. The government is establishing a new task force to fight serious and organised financial crime. The government will provide $127.6 million over 4 years for investigations and prosecutions that will address superannuation and investment fraud, identity crime, and tax evasion. The task force will build on the work already done by Project Wickenby, a cross-agency task force designed to strengthen national law enforcement and ATO compliance activities against tax fraud, which finishes in 2015. It will enable agencies to extend their cooperative work across broader serious financial crime risk. The start date for the portfolio holdings disclosure reporting and choice product dashboard requirement aspects of the stronger super regime will be deferred until 1 July 2016, according to ASIC. The delay is to allow the government further time to consult on the detail of the requirements, which were due to start on 1 July 2015. Current interim relief so that licensees do not have to provide a hard copy of the product dashboard with the periodic statement has been extended to 1 July 2016. APRA has released 31 reporting standards for the superannuation industry. 26 are final reporting standards, and 5 reporting standards are being released for consultation. Between 2013 and 2015, APRA released a number of final reporting standards for superannuation. Since the release of those standards, APRA has continued to receive feedback from industry on a range of implementation issues, and there have also been a number of developments in the superannuation regulatory framework.